So the FOMC meeting is in a couple of hours' time. From this meeting, I presume we're going to get a 0.75% interest rate hike from the Federal Reserve or Jerome Powell himself. We'll see how the market takes this. Obviously, people are speculating it's possible for a 1% interest rate hike, but I don't think that will happen personally. Normally, higher interest rates mean to depreciation asset prices. Last FOMC meeting, we actually had a higher by 0.25% interest rate hike from the FOMC, but cryptocurrencies actually rallied off the back of that news. So would a similar thing happen here? And how will the market take this interest rate hike in general? It's also important to remember that tomorrow we get the official GDP results from the Q2 in America. A technical definition of a recession is 2 consecutive quarters of negative GDP. Although Janet Yellen this morning came out and said that that isn't the technical definition of a recession anymore because they don't want it to be, basically. So if we are in a recession, how will the markets react and how will cryptocurrency react? Who really knows? Is it priced in right now? I'm not so sure. How will crypto react specifically? That we really don't know. You can obviously presume that it's going to act like a risk-on asset. It has been following the Nasdaq pretty close, but we don't actually know because crypto's never been around during a recession. Some other important factors to take into consideration are earnings. Obviously yesterday Walmart was a big shocker. It came out lower than everyone thought. However, I would argue that because Walmart's earnings were lower, they probably lowered their prices because of the amount of stock they had. They were probably trying to sell them off as a discount. And because of this, then that will actually impact inflation numbers in the future because they will have had to bring pricing down for people to be able to buy the surplus of stock. In other areas, companies actually perform better than expected across the board. Around 75% of companies perform better than expected. Going back to inflation, adding more to this basket and the narrative around what we should do with our trades, we get the CPI print at the start of next month from June. We've seen a massive drop in the price of oil from the all-time high, so I personally believe just taking that into consideration and not the other commodities like wheat, etc., which have dropped over the last few weeks, that we will see a lower CPI print from June than we did from May. This would give the Fed some grounds to be more dovish, and that may in turn lead to some sort of relief rally. I would assume this relief rally would happen in crypto and equities, and this is where I get speculative. A lot of people use this time to deleverage positions and take some profits, and I think that's a sensible idea if you're massively exposed. However, I won't be doing that. I'm not holding with any margin, so I'm not scared of getting liquidated. I can ride things down just as I can ride them up. I think this relief rally could turn into constant stimulus and actually a leg back up because the Fed said nothing will change unless something breaks. By this time, they're trying to re-stimulate the market for the midterm elections. I think we'll start to see some breaks in the market and they won't re-reverse.